So let's get started. The first thing we're going to talk about is the 3 mistakes that many investors make during the election year, okay, which is this year, right? So every 4 years we do have an election, and these are the common mistakes that many investors make. Okay, so if you guys are subscribed to the eSmart report, okay, which I send out the email every Monday and Thursday, you would have already read a quick one on this topic here, right? The 3 mistakes that many people make. Okay, these are the 3 most common mistakes. Number 1, they tend to overanalyze like who's going to win, right? For this year itself, it's going to be either Trump or Biden. Okay, so again, people tend to overanalyze like, okay, who's leading, who's eventually going to be the president, and then from there, they make a decision on how they're going to trade and invest. Okay, so that's number 1 mistake. Okay, we're going to talk a little bit more into it. Okay, number 2 is a lot of people, when they come into, hear this thing about election upcoming, they might get too worried about, there's a lot of uncertainty, the market is going to be very volatile, and they got too scared to actually take action. And then what they do is they pull out everything, right? They pull their entire funds out of their investment portfolio, right? So that's another mistake that many people make. Okay, and the third one is they try to trade around the election or invest around the election. Okay, so that's also another mistake, because this one here, if you don't do it properly, you can actually burn yourself. Okay, so we have also witnessed that earlier this year, where COVID happens and the stock market is like very volatile, right? There are people who make a lot of money, but also people who lose a lot of money. Okay, and there are people who, in a very short time make a lot of money, but they couldn't protect their profits and capital. Number 2 thing is we take a contrarian perspective, which means that we take it from another angle, right? Another perspective to look at this. Now, what drives market? Okay, that means if you're looking at the equities market, right? What pushes the price of, let's say, the S&P market higher? Okay, it's definitely demand, right? When people put their money into the stock market, there's demand of it, okay, and that drives prices higher. Now, if you understand that, right, and you take a look from another perspective here, is that now if everyone is pulling out funds before the election, okay, what will likely happen is the stock market price will definitely see some drop. Okay, but what we want to do is before the herd, before majority of these people start to put their money back into the stock market, we want to be that very first few to actually be invested first, right? And when we do that, and then when the time all this majority of the investors starts to come back to the stock market, they start to reinvest into the stock market, then what will happen over here is that it will drive prices higher, and we would already have been invested in it, right? So when they drive prices higher and we are already invested in it, we actually can make more profits from that. Okay, so this is the part where why this webinar here, I want to use this time to actually prepare all this material and help you guys, is to ensure that all of you are actually prepared, not only from a strategic point of view, but also from the emotional, the mental mindset point of view, right? So that you can prepare yourself for this election. Use this as another opportunity to actually make some money from the market. Okay, now the next part here that I want to talk about, okay, is what we call seasonality, or it's just a fancy name of putting it as like a cycle, right? So every 4 years we do have an election happening in the US, okay, and this is where it becomes like a 4-year election cycle. Okay, so this is the four category. You have the election year, you have the post-election year, you have the midterm election, and you have the pre-election. Okay, so this year, because we are going to have an election in November, right? So this is 2020 is considered an election year. Okay, then next year, 2021 is the post-election, 2022 is the midterm, and 2024 is going to be your pre-election year, and then it repeats again, right? Because every 4 years we have an election. Okay, and I've done the study, I've done the research, and these are the patterns that I want to share with you, what's likely going to happen in the various markets based on this cycle. Okay, and once you understand this, this is where you can actually capitalize on this, and based on statistics, okay, make some investment or trade decision. Okay, so let's get started with the stock market, right? So over here in this webinar, when we mention stock market, we are generally referring to the S&P. Okay, so right now we are somewhere in mid-September, right? So this is the patterns that's happening. Okay, so I actually did the study and research, right, based on the election year. Okay, that means not only 2020, right, but based on the past election. Okay, so in total there is 17 data points. Okay, based on 2020. Going back 4 years, 2016, 2012, etc., etc. For the past 16 elections, okay, what are the patterns that's happening? Okay, so between 14 September to the election day, okay, this is the pattern that happens, right? So if just to share with you a little bit how to read this data here, right? So you can see on the right here, there's this 9 gains, 9 loss. Okay, what it means is that from 14th Sep to 3rd of November, okay, for the past election year, okay, 9 years the S&P actually closed higher. 8 years the S&P closed lower. Okay, so you can see here, this is 2016 election, it closed lower. 2012 election, it closed lower. 2008, okay, it closed lower. 2004 election, it closed higher. Okay, so that's what this pattern means. Okay, now if you take a look at the probability, is basically close to 50-50, right? That means you have a 50% chance that in this period the stock market is going to rally. There's a 50% chance that the stock market is going to go lower. Okay, so now if you know this statistics 50-50, what it means to you is maybe you don't want to, be invested, or you don't want to trade first, okay, because it's 50-50 chance, right? You either go higher or go lower 50-50, so not a very high probability thing. Okay, so in other words, when you have this statistics, then maybe from now to November is a period where you don't want to be too actively involved in the stock market. Okay, and you want to use this period to actually do your homework, to prepare yourself for maybe next year or such. Okay, I'm going to share with you all the statistics. Okay, this is after the election, right? So 3rd November is where they're going to announce the vote. Okay, and then I'm taking the 4th November all the way until the end of this year. Okay, so that's the end of this election year. And out of the past 17 times, okay, 11 times it actually closed higher. 6 times it closed lower. Okay, so if you take a look at this, still not too bad, right? Because most of the time, the S&P actually closed higher after the election. Okay, so what does this data mean to us is that if you want to be trading or investing in the stock market, okay, the better time to focus is, of course, after the vote, okay, which is 4th November to 31st December. Okay, and from now to 3rd of November, maybe it's not a good time to be actively involved in the stock market. Okay, so this statistics tells us that. Okay, so this is for this year, right? 2020, the election year. Now, let's go through a little bit on gold. Okay, gold. So gold has been a very hot topic this year, right? 2020, because of that huge rally, and we also have a quick sharing. I remember, right, some time back, why it's not the best time to jump onto it first, right? And I hope you guys are not falling into the trap, because if you did, then right now basically gold and silver are just in a range environment, and if you don't have a proper plan, you're probably affected psychologically. Okay, so again, the commodities market, especially gold, will have an effect, or I would say the election will also have an effect in the gold market. Okay, and same thing, what I did is I went into that 4-year election cycle to go and study a little bit what are the patterns. Okay, now take a look at this. Okay, this is for gold. Okay, from now, somewhere around in September to election, 3rd of November. Okay, for the past 13 times. Okay, that means for the past 13 election years. Okay, 9 times gold actually dropped. Okay, within this period. Now, if you take a look at this, it's a higher probability for gold to drop compared for it to rise, right? So what does this mean to you? If today you are invested in gold right now, or I would say if you haven't invested in gold, okay, let me correct that a bit. If you haven't invested in gold and you're looking to invest in gold, don't invest during this period. Why? Because you look at the statistics, out of 13 times, 9 times gold price will drop. Okay, why do you want to invest where it's going to drop in this period, right? What would be a better time to invest in gold if you're looking to invest in it? is after 3rd November, right? Because you know that there's a high chance during this period gold price will drop. Okay, let's take a look at after the election to the end of 2020, right? What will happen? Okay, if you look at the probability, it's about 50-50. So again, if you're looking to invest in gold, maybe, it's not a good time. That means from now until end of this year, it's not a good time already. Likely, it's just going to be 50-50 chance. Okay, so this is what the statistics are telling us. Over here, I want to share with you the gold chart as well. Okay, so putting that patterns, okay, those statistics into perspective, okay, we know that for the remaining of 2020, which is this year, likely gold is not going to go anywhere in terms of probability. Okay, it's not going to go very much higher, or it's probably not going to come down, right? It's 50-50, so the probability is not in our advantage. And if you take a look into the technical charts, right, we can see that there's a huge rally up. Okay, this is on the weekly chart, right? So it's pretty significant. Okay, now what does this mean? Usually, when there's a huge rally, okay, price will then pause a while because it needs a break. Okay, and the term we use here is called correction. Okay, so after that significant rally, okay, likely gold will transit into some form of correction first, before another push. Okay, and based on technical analysis over here, a good price area to pay attention to, okay, is somewhere around 1700 to somewhere around 1800. Okay, so around that period, that area of price is a good opportunity to really monitor. Okay, right now gold is trading somewhere around 1950. Okay, 1950. Okay, so there is still that room that it can drop further. Okay, so I would suggest that be patient, right? So if you're not invested in the precious metal for now, be patient, right? Be patient on that. Okay, and of course, since we are talking about US presidential election, we need to also look at the US dollar, right? So same thing, I dig into how the dollar actually performed during this 4-year cycle. Okay, this is this year. Okay, before now, from now to before election, 7 out of 13 times, 12 times, the dollar actually strengthened. Okay, so it's more or less like 60-40, right? It's still not very high in probability. Okay, so wouldn't be too worried about this. After election is 50-50. Okay, so again, what it means is that this, if you're trading, commodities, you're trading the futures, you're trading the currency market, the dollar index is pretty significant. Okay, so if you're looking at that, then from now to the end of this year, likely not much is going to happen, right? Again, there's no statistical advantage to us, right? So there's not much in terms of what we want to focus on. Okay, so these are all statistics, right? It's not telling you to buy or sell immediately, but these are good information to help us to know, okay, this period, do we want to focus on the dollar? Do we want to focus on the gold market? Do we want to focus on the S&P market? Okay, so that's how I'm going to use this. Okay, and hopefully with this information, you'll be able to benefit from it as well. Okay, so this is a dollar chart. Okay, again, this is on a weekly time frame. From a technical point of view, I personally see there's still room for the dollar to weaken. Okay, but again, the market is not going to go like one way all the time. Okay, so what I'm anticipating here is that short term, okay, the dollar likely is going to see some support, some strength coming in. It can be because of the volatility that election is going to play out. People are putting their money in safer asset, which is the dollar for now. Okay, and we might see that short-term rally. Okay, and the longer-term perspective, okay, because there's a lot of printing right now, the fundamental is weak for the dollar. Okay, so overall, what I'm seeing over here is there's a possibility that the dollar can rally back towards somewhere around $97, and in the longer-term perspective, it can drop all the way back down to around $87, $83. Okay, so this is the big picture perspective in the dollar index. Okay, so I hope so far so good. Okay, a lot of information I understand, right? But I'm trying my best to present to you everything over here in this one webinar, and make sure that it's complete, right? It's comprehensive and holistic in all this understanding as well. Okay, and of course we also want to look into. So we look from so give you a big picture, right? So we look from macro perspective, understanding the liquidity environment, right? Then we go into the seasonality factor, which means that based on the 4-year cycle, where are the probability, how the probability is playing out. Okay, so we look at macro, we look at seasonal, we also look at the economic cycle. Okay, and of course, right now, again, all those toolkits I'll give you. Okay, but right now, where we are as of today, okay, in the economic cycle is we are somewhere around full recession. Okay, so earlier this year we are in early recession, right? Right now we are in full recession. Okay, how does utilizing the economic cycle help us? Okay, if you take a look at this, right, this model here, different phases of the economy, okay, different sector, different stocks tends to perform. Okay, so if you take a look at full recession, okay, which is the upper left quadrant of that circle, okay, the stocks or the sector that's going to perform the best, you can see, is cyclical, technology, and industry. Okay, in fact, if you look at 2020, all the technology stocks are performing crazy, right? Nasdaq all-time high. Okay, now as we progress into the next phase of economic cycle, which is the early recovery, okay, then that's where the other industry is going to come in, right? Industrial, basic industry, and energy. Now, if you put that perspective into what's happening right now, and also put that perspective into the upcoming election, okay, there's a lot of opportunity that's going to come in these two sectors: energy, basic industry. Okay, industrial is already in there, right? So basic industry and energy sector is going to perform. There's a lot of opportunity for it to rally and rise and perform. Okay, why? Because number one, when there's an election upcoming, right, what will happen is they have a lot of different policy, right? The Democratic Party will have a certain policy, the Republican Party will have a certain policy, okay? And with COVID-19, right, what will likely happen is all this policy will involve a lot of fiscal policy from the government, which means that the government spending is going to be increased, okay? And most of the time, the fiscal policy, where does the money is going to go into? It's definitely going to go into your industrial, basic industry, and energy. Okay, so a lot of construction is going to happen, a lot of investment into maybe energy sector, green energy, renewable energy. Okay, so a lot of all this is going to go into that sector, right? So the timing of all these things actually come pretty neat. Okay, so I want you to know and to capitalize on this opportunity as well, right? So to focus on industrial, basic energy, basic industry, and the energy sector. Okay, moving into late this year and next year. Okay, so over here, let me show you the toolkit that I'll send over to you as well, right? So under this here, okay, you can see this is where I extracted that, right? So again, all this are updated, latest data, okay, but as we progress, of course, you can play around with all this as well, right? So all this are all kind of like automated. All you have to do is just change this, and then everything will auto update itself. Okay, so as of now, this is updated. Okay, this is how it looks like. We are in between full recession and early recovery. I would say we are likely still in full recession. Okay, and that's where you refer to this table. Okay. And from there, okay, this is where I've also compiled a list of stocks, okay, for all of you to perhaps take note of, okay, depending on who's going to win this election.